Welcome to the New York section of SME, the Society of Mining, Metallurgy, and Exploration, an international society of AIME of more than 13,000 professionals serving the minerals industry in more than 100 countries. Today is December 8th, 2020. Thank you for joining NYSME's virtual symposium titled Strengthening Critical Minerals Supply Chains in North America, featuring the key role of Quebec. This panel's discussion is titled, How are mining chains advancing the development of responsible nickel mining? The panel's moderator is Alex Larn, Principal Consultant at CRU Consulting. The panel will now begin.
Hello, everyone. Many thanks for joining this panel, which is titled How Mining Chains Are Advancing the Development of Responsible Nickel Mining. We're very pleased to be presenting here on behalf of the SME New York chapter and with generous sponsorship from the Quebec government and Shearman Sterling and Hatch and SRK. My name is Alex Larn. I'm a principal consultant at CRU, and I'm joined on this panel by Jonna Muinonen, who's the president of Dumont Nickel, and Andrew Frame, who's a managing director at Evercore. Within this panel, each of us are going to give a brief presentation, 5 to 10 minutes or so, and then we've got about 20 minutes at the end where we'll have a more open discussion amongst the panelists. So I'm going to be speaking first, and then Jonna, and then Andrew. So I'll get straight into it. I think in my presentation, I kind of just wanted to set up sort of a problem statement of understanding, the challenge around we're going to need a lot of nickel in electric vehicles in the future, both globally and in North America. How big is that challenge, and what are the key sort of barriers? And then I think in Jonna's presentation, she's going to be talking about the more specific supply situations and some of the solutions that might be available to meeting the gap. And Andrew in particular is going to be focused on the financing aspect. So in my first slide, I just wanted to show very quickly, CRU, for those of you who don't know us, we are independent specialists in commodity market intelligence. I've worked here for about 12 and a half years. We have 3 departments providing either off-the-shelf subscription publications that people could subscribe to, covering a wider range of mining, metals, and fertilizer commodities. We also have a consulting business where I work, which does strategic single client work, helping people solve problems. So this first slide, I wanted just to show that firstly, not all electric vehicles are equal. There's a very big difference between the battery size, in particular in, say, a Tesla, a full battery electric vehicle, compared to a regular hybrid electric vehicle like a Prius. And that difference in battery size corresponds roughly to a significant difference in metals requirement. So where a hybrid electric vehicle may only need, say, 1 or 2 kilograms of nickel per vehicle, a Tesla may need 30, 40, 50 kilograms per vehicle, so substantially more. And when you think about that in terms of costs as well, you can see that in that chart at the bottom, nickel constitutes more than about 25% of the cost of the different battery metals in the cathode of a lithium-ion battery for an electric vehicle based on current prices. So what we see is that, nickel's profile as a battery metal has really taken off. And if we look to the future, this shows CRU's forecasts of electric vehicle sales globally. And on the left-hand chart, you can see that dotted line shows that the penetration for battery electric vehicles in particular is expected to increase from 3% up to 22%, with that offtake particularly taking off sort of in the back half of the 2020s. I think it's interesting that actually during you can see the quite severe dip in that previous chart in 2020 for the impact of COVID-19 on the auto sales. But it's interesting that EV sales have actually done particularly, they haven't really been impacted too badly by the pandemic, thanks to, in particular in Europe, strong sort of green incentives and stimulus measures that have helped to boost EV sales despite a significant turndown in the wider auto sector. When we look at that chart on the right of regional sales of battery electric vehicles, you see it's pretty heavily China dominated, with more than 50% of global BEV sales taking place in China, compared to about 20% in North America. Now on this next chart, what I wanted to do here is translate the number of EVs. The chart on the left-hand side shows cathode chemistries. And the key takeaway here is the increasing nickel intensity of these cathodes. So not only are we seeing more EVs on the road with larger batteries, we're also seeing more nickel per kilowatt hour in those batteries. And you can see that in sort of the NMC 622 and 811 cathode chemistries taking a larger share over the forecast period. And that corresponds to, NMC 811 means the ratio of nickel to manganese to cobalt is 8 to 1 to 1. So we've got more nickel relative to sort of other cathode chemistries. And that translates into batteries moving from being only 4% of the global nickel market at present to as much as 24% by 2030. And therefore, over the next decade, we've got EVs contributing more than half of global nickel demand growth. So what I'm trying to do in this slide is set that rapidly growing demand for nickel in batteries against the wider nickel market and the supply in particular. So many people will be aware of the two sides of the nickel market, the class 1 side, that's sort of pure nickel, and often we include nickel chemicals in there. And then the other side of the market being iron nickel alloys, ferronickel, nickel pig iron, which are used in stainless steel. So there are certain nickel applications, including batteries, which require class 1 nickel. But all of the supply growth that we've seen over the past 10 or so years, or the very substantial majority of it, has come in the form of NPI, in particular nickel pig iron in China and Indonesia. So we've got demand growth that needs class 1, but supply growth that has historically largely been class 2. And that's led to the situation you can see on the right-hand side, where if you look at the demand for nickel that specifically requires class 1 versus the red line showing supply, that tightness has drastically increased over the past few years. And looking to the forecast period, we've got actually for the first time in some time a significant amount of additional class 1 supply, which is predominantly thanks to a series of Indonesian hydrometallurgical projects, H-power projects, which are expected to come on stream starting in the next couple of years. And will significantly contribute to class 1 supply. However, these sorts of projects have in the past encountered quite severe technical challenges, which have led to difficulties around ramp-ups. There's also been capital cost overruns. So if we were to take a more conservative view and discount some of that Indonesian HPAL output, as shown with the dotted line over the forecast period, you can see that we don't have enough class 1 nickel to meet the demand to a growing extent. And even with those projects included, if you look out to 2030, you can see that substantial jump in demand for nickel in batteries. So we're going to need much more class 1 nickel supply into that longer term period as well. Now, thinking more specifically about North America, what I wanted to show was that as much as there are significant gaps in the supply chain, I'll talk about in the next slide, technically, North American mined resources of nickel are actually, especially when you compare them to lithium and cobalt, pretty substantial relative to the demand for nickel in EVs sold in North America. So what this chart on the left-hand side is, it's showing an estimated demand for nickel in EVs sold in North America over the forecast period. You can see it increasing from maybe 25,000 tons today to as much as 200 plus thousand tons by 2030. If we compare that to total mined production of nickel across North America, it actually stacks up pretty well. We've got a lot of nickel production across Canada, a little bit in America, and also in Cuba. When you start discounting the Cuban material because of embargoed entry into the US, you lose 50,000 tons or thereabouts. And also, not all of that nickel is converted into finished nickel within North America. And at the moment, there's only a tiny amount of supply of nickel sulfate, which is the form of nickel that we need to use in batteries. So whilst we've got relatively strong resources within North America, the other factor is obviously that a lot of the nickel that's produced in North America, or all of it at the moment, goes into other applications. So in order to divert that into batteries, we would need to cut off, for example, superalloys for the aerospace industry, which would be a real challenge. So we would have to find that material elsewhere. So that's why there's a lot of focus on new mining projects within North America as well, in order to bring on new nickel supply to try and help meet that demand from the battery sector in particular. But as you'll see on this next slide, there's a big gap between nickel mining and processing to get all the way through to electric vehicle use. And what I've tried to show in green is what we've got here in North America, and in red is what we don't. So there's minimal supply of nickel sulfate at the moment, and that wouldn't be necessarily too hard to add by itself. But The challenge is that there'd still be the gap in the supply chain between the battery packs and nickel sulfate. You still need precursors and cathode active material, which are to some extent dependent on the availability of cobalt and lithium, as well as more cell manufacturing in North America as well. So it's clear that new and existing nickel miners, if they want to be moving their material into the EV space and take advantage of nickel demand in this area, it's clear that there's gaps in the supply chain and they need to figure out a route to market. And that supply chain gap isn't the only barrier to the addition of new nickel mining within North America. There's also challenges around financing. There's the dominance of China across especially the EV supply chain. There's environmental challenges and permitting issues there. And then also something particular to the battery space is the demand for the form of nickel, the purity of nickel sulfate and so on, is evolving rapidly in response to quick changing technology in the lithium-ion battery as well. So you get sort of moving goalposts, which makes it harder for a mining project with a long lead time, for example. Now, there are various approaches that could help to overcome those batteries. There's technical solutions, there's recycling might help. There's also governmental involvement through financial or other incentives. And also the potential, which we'll discuss on this panel, I think, for OEMs, for car manufacturers, for example, to take a greater role in providing offtake and pushing through mining projects in order to get that material out of the ground and secure supply for them into the long term. So those are the only slides I was going to present today. So I'll pass over to Jonna to go into hers.
Okay, thank you so much, Alex. Today I'm going to talk a little bit about what the state of nickel projects look like in North America and where they are, what they are, and what are some of the options to look at advancing them. Yeah, thank you. Over the past few years, ESG, which stands for Environmental, Social, and Governance concerns for investors have increased with regards to the companies and industries they are investing in. There are several reasons why we're talking about responsible nickel mining today, and is being driven from both investors and the end users of nickel products. Nickel is playing a larger and larger role in the development of a sustainable energy future that incorporates batteries for both energy storage and electric vehicles. More investors and end users are demanding responsible sourcing for that supply chain. I'm sure many of you are familiar with Elon's call for more nickel back in August at the Q2 conference call, as well as in September at Battery Day. To meet Tesla's goal, he needs nickel, specifically nickel that is mined in an environmentally responsible way. After that announcement, there were several follow-up announcements from various nickel market participants, from juniors all the way to majors, that spoke to the demand and the focus on ESG as part of the nickel development strategy, including Vale, which is the last quote there from Mark Tavers is shown. Slide 3. What does responsible mining mean? I'm not going to provide a holistic answer here, but a review of the various nickel projects in North America raised a few themes, including reduction in greenhouse gas generation, where American nickel sulfide production is already significantly lower than comparative laterite nickel production, but many projects within both the major and junior mining companies are looking to lower their footprint even more by looking at things like carbon sequestration in their tailings, electric vehicle use in the mines, local supply chains, including delivery of product, and electric or renewable power supply. Safe long-term tailings storage with no acid mine drainage will lower reclamation costs and lower future environmental liabilities and risk. And social license to operate is extremely important, with many companies reaching in to all their local stakeholders through consultation, as well as looking at how to provide long-term impacts to the local communities once the mine is depleted. Slide 4. As a quick case study, I want to discuss a little bit more about Dumont project and how we are developing responsible nickel in North America. The Dumont Nickel Cobalt project is one of the few large-scale and fully permitted nickel cobalt projects in a low-risk jurisdiction that will be capable of delivering over 35,000 tons of nickel annually for 30 years to begin to satisfy the significant growth expected in the nickel and cobalt demand driven by the electric vehicle sector. The deposit is located approximately 25 kilometers west of Amos, Quebec, and Amos is in the Abitibi region near two regional mining centers, Val-d'Or and Rouen. The region has a rich mining history with supportive local communities that have skilled local workforces for both construction and operation. The Dumont deposit has significant major infrastructure in place. It is located directly next to an all-weather paved highway with a rail line passing through the southern portion of the property and high voltage hydroelectric power line 8 kilometers away. The Dumont Nickel project is fully permitted, shovel-ready project that prioritizes producing nickel with a low carbon footprint and strong stakeholder support in a Tier 1 mining jurisdiction. Slide 5. Dumont has made responsible nickel development a cornerstone of its operating philosophy since starting the current work program on the project back in 2007. The project is permitted both federally and provincially in the Great Mining Jurisdiction in the Abitibi region of Quebec. Early on in the development and study process, we engaged with local stakeholders through a voluntary consultation process to integrate stakeholder input into the project design. Our relationship with the local community remains strong, and in 2017, we signed an impact and benefits agreement with the local Abitibi First Nation, Abitibi-Winni First Nation. This is the first IBA negotiated with the First Nation in the area. We have increased the electrification of the project through the addition of trolley assist haulage, which reduced our diesel consumption by over 30% in 2019 study versus our previous studies. The increased use of hydroelectric power and the carbon sequestration potential of the waste rock and tailings could make the nickel and cobalt produced from Dumont some of the greenest in the world. The tailings and waste rock could potentially store up to 85% of the project's greenhouse gas emissions. We have been actively quantifying the capacity of Dumont waste to sequester carbon dioxide from the atmosphere since 2011, with the installation of 2 test cells on the project site. In the 2019 study, we made changes to our tailings deposition plan to increase the exposure of tailings to the atmosphere to improve the sequestration potential. Slide 6. In September, Tesla presented Battery Day and discussed the importance of them for local sourcing of raw materials for their cathodes. North America has the ability to supply the raw materials for the battery industry, and shipping them to Asia for processing and then returning them in a battery for a car manufacturing increases both cost and greenhouse gas emissions. According to the presentation on Battery Day, Tesla is looking at options for a cathode plant in North America. And with that, responsible mined local sourcing of nickel could be an important piece of that puzzle. But what are the options for new nickel sourcing in North America? Slide 7. This slide shows a selection of nickel projects in North America that are currently under development. This slide does not include the current nickel production from North America, which is approximately 180 to 190,000 tons per year. It also omits the projects announced by the current producers that will maintain the existing production in the future, as well as early stage exploration projects. There is a selection of projects all over North America that could be developed with the right nickel market conditions to supply responsibly mined nickel for future market growth. Slide 8. A review of the publicly available information of these projects show a few things. With the lack of investment in the nickel project development over the last 10 years, many of these projects require significant work to complete studies and permitting to attract investment to start construction. This will increase the development timeline unless investments are made quickly. The lack of investment in exploration over the last few years has reduced the number of nickel projects on the shelf, shall we say, that are waiting to be developed. So even if all these nickel projects make it into production, this still only represents 10 to 20% of Tesla's demand to reach stated goals of 20 million cars and 3 terawatt hours of battery manufacturing capacity by 2030, which might be slightly more aggressive than maybe CRU's forecasts, admittedly. But we will need more projects, no question. Many of these projects use higher nickel prices than today's current spot price, although with the recent gains in the last half of 2020, the gap is starting to close. And with future predicted shortfalls, the nickel price will increase. Now is the time to develop nickel projects to take advantage of the nickel market deficit predicted by 2025-2026. And these projects have favorable capital intensity when compared to the recent history of laterite projects that have been built over the last 10 years. Slide 9. So why haven't these projects been developed? I think there are many reasons why we haven't seen any recent projects in North America outside of replacement nickel from major producers being developed. The nickel market has grown significantly over the last 10 years from 1.4 million tons in 2010 to 2.4 million tons today. And almost 100% of that growth have been from laterite developments for NPI production in Asia, with a few exceptions, including the Novo mine in Australia and the Eagle mine in Michigan. This has kept the market in balance with deficits, but there was, of course, a very large inventory to consume that came out of 2008-9 and has kept the price low. The battery industry represents a new and growing market for nickel that will now need to be filled by additional development. I also believe that with the takeover of Falconbridge and Inco in 2006 and 7 into large diversified mining companies, the focus on nickel was diluted by these historical explorers and developers of the metal, and future development funding and capital had to compete against other higher priority metals at the time. The importance of responsible local sourcing to investors and the battery industry, combined with future forecasted market deficits, will incentivize new investment in North America. Next slide. Typically, nickel concentrates are processed by smelters and refineries to produce finished nickel metal, as Alex already touched on. When compared with copper or zinc, nickel is still very vertically integrated industry, where most of the worldwide smelting capacity is tied to owner-sourced concentrates as opposed to third-party custom feeds. And if anything, sulfide smelting and refining capacity has dropped worldwide since 2007. The lack of capacity for sulfide concentrate inhibits sulfide nickel growth and reduces the competitiveness of smelter payables, which in turn impacts the economics of these development mine projects. Most of the nickel from the projects previously presented is available, and the offtakes have not been sold to an existing nickel producer. This opens up opportunities for investors that physically want the downstream nickel for use in the battery industry, as they are not yet tied to the majors. Slide 11. There's potential opportunities to develop a lower cost, lower greenhouse gas footprint process to transform nickel concentrates to nickel products as required by the battery industry and bypassing traditional smelting and refining. Many of the projects previously presented, including Dumont, are looking at options for lower cost downstream processing to allow direct access by the battery industry. In conclusion, end users of nickel for the battery industry have indicated a preference for responsibly mined nickel in North America. But how will that translate to investment and development remains to be seen. There are significant nickel projects that are capable of being developed to increase overall nickel production in North America. These projects have compelling capital spend intensities with integrated environmental and social considerations. The battery supply chain, government, and OEMs are very likely to incentivize nickel production for those projects that meet these criteria. The current issue facing the supply chain is not just developing mines and producing concentrate. Investment in process development will be required in concert with mine development. There is opportunity for cheaper, more efficient routes to market, and many companies are evaluating various concentrate processing technologies to produce feed directly for the battery industry, including Dumont, Talon, Canada Nickel Corp, Giga Metals, and FPX Nickel. Nickel will power a green future. It is time for investment in North American projects to meet the coming demand. Thank you, Alex.
Thanks a lot, Jonna. And now I guess I'll hand over to Andrew to give his talk.
Thanks, Alex. So because a number of the themes in the financing side of things in capital markets overlap with the slides Alex and Jonah presented, my thought was to just give a quick introduction to Evercore and then touch on a few key takeaways that we're seeing in the current investment climate. And then I think we'll weave some of the financing thematics into our Q&A roundtable. So if I can just get the next slide. So Evercore is a leading independent advisory firm. We're an investment bank that is independent in the sense that we don't lend to clients, we don't have any conflicts, and we'll always be on the client side. So we're spending a lot of time coming up with a thesis on how the mining industry is going to be able to respond to this tsunami of demand that's coming across the battery metal supply chain. So on this slide, you can see this is our global presence. If I can just get the next slide, so you skip through these. This is a little bit of an introduction to Evercore. You can see, we're double the size of the next independent, and we're the 4th largest M&A advisor in the world. It's kind of Evercore's the investment bank that no one's has heard of, but we've got some of our services on the left there, but we're full service M&A and capital advisory, so helping companies raise money. And then just on the last slide that I'll use to talk through. So we as a firm are approaching the electrification quite holistically, right? And it's going to take, to solve the scale of the challenge here, it's going to take the full value, the supply chain. So it's not just can the material be mined, it's can the material be processed, and then it's solving all of these different commodity supply and demand issues concurrently. So it's not just nickel, it's lithium, it's graphite, it's manganese, cobalt to a lesser extent over time. But it's going to be a kind of all hands on deck approach here, because the end users are going to have to get involved, And I do think even governments are going to have to get involved here to solve the scale of this challenge. So some of the takeaways that I had for the challenges on the financing side right now is that, especially with nickel, we've had a period of sustained, below mid-cycle pricing. So there hasn't really been an incentive, and there isn't an incentive right now for the owners of the big producing nickel assets to expand either their mining production or their smelting capabilities. If they don't act, however, they're going to miss the boat, because at some point technology will evolve, battery technology will evolve, different alternatives for energy storage will evolve. I think it's really interesting, and Alex pointed out on his slide, is that ex-Indonesia, you really haven't seen any growth in nickel production. So while we all see the demand coming and we can see the projects, there's currently a disconnect between, can these projects be brought online and financed in a timely fashion to meet that demand? When you look at the last 8 years of production, it's been very flat. And I think, Jonah, your point on the lack of independent majors in the nickel space has really been an effect of that, with Inco and Falconbridge going away. I think one of the thematics here is that the projects that Jonah pointed out, but also the ones in Australia, they tend to be owned by capital constrained owners. They're not sitting within a major who can underwrite a multi-billion-dollar project. They tend to be smaller listed public companies. There's a few medium-sized ones in Australia, or they're sitting in a portfolio with a private equity firm who has, while they might want to allocate more money to a project, they really are limited in, how much of a percentage of their fund that they can invest at any one time. As we look at the capital markets, we're seeing this really interesting shift evolve right now. Traditionally, I think people, when they think of mining projects, think of London, Canada, and Australia as sources of capital to advance junior to mid-cap mining projects. We recently led an offering for Piedmont Lithium, which is a PFS stage spodumene and lithium hydroxide developer, and we saw interest from traditional institutional investors on the Nasdaq, which I think is a recognition that investors are starting to see there's a huge opportunity here for across the battery metals supply chain, but particularly in these metals that have huge supply demand deficits, and getting in early and backing the right companies with the right projects. I think there's tremendous returns to be made. There's a role to play for OEMs. There's a need, I think, to kind of underwrite these different projects, that both in nickel, lithium, graphite, having an OEM stand behind the project through an offtake or through some sort of agreement or a project investment is going to be really important to validate these projects for the traditional institutions who don't have the technical knowledge, the technical knowledge to underwrite these projects. So in Piedmont's case, it was Tesla, but you've seen it in a number of other cases. And I think as more time is spent from institutions giving that feedback to companies, but also as the OEMs start to kind of really dig in on what their raw material needs are. There's been a lot of talk of lithium, less talk about graphite, manganese. Obviously nickel with Tesla. I was talking with another OEM this morning, and I said to them, well, of your commodities, which ones are you most worried about? And they said nickel, hands down. They think they'll find a solution for everything else, but they want to be in high performance vehicles and long range. There just isn't an alternative right now to nickel. there's also this evolution going on in capital markets right now where there's a bifurcation between the valuation of chemicals companies and the valuation of mining companies. And, I think it's an interesting thing for, promoters of mining companies to think about. And as investors are evaluating it, if you can get as close to a battery feedstock as possible, you can make the claim that you're a battery chemical supplier. So it's easier probably in lithium than nickel, but I think as we go down the path of, like Jonah, what you're talking about with people going direct to a nickel sulfate, it's going to be something that will allow people to differentiate. Thirdly, ESG is becoming increasingly a focus of investors. And there really is going to be, I think, a greater focus of carbon load of molecules in batteries, driven by both investors with their fund mandates, but also consumers. And then finally, I think government can really help here. Quebec has done a great job through their programs. DOE funding, interestingly, that is now extending in certain circumstances to chemical plants. They're not funding mines yet, but I think that's something that they should explore. But it's something to keep in mind, that there are going to be programs available, I think, in the US for people who invest in more downstream capabilities. And maybe that's a solution to the smelting challenge. But yeah, they were the kind of key points I wanted to hit on, but maybe we kind of transition over to the roundtable, Alex.
Sure. No, thanks a lot for that, Andrew. And actually, I suppose on that last point, yeah, I think the governmental involvement is very interesting, and you get the overlap with sort of critical mineral security, which brings a whole new sort of set of incentives behind trying to fill out these gaps in the supply chain that we see at the moment. And I think it's interesting. I suppose I wonder if either of you have any thoughts about sort of there's a slightly greater willingness to invest in, say, Europe. I don't know if it's a perception that the EV takeoff is going to be slower in North America compared to Europe, for example. But we see much more of that supply chain be built out, not necessarily by European companies, but within Europe. LG Chem and various other cell manufacturers are moving or installing plants in Hungary, Poland, and so on. And further upstream, we see BASF has a joint venture with Norilsk Nickel in Finland to supply nickel sulfate, but we're just not seeing those kinds of investments within the US and Canada.
Yeah, I think it's probably cultural. Not that there's, I think maybe the people on the coasts in the US tend to put more weight on this, but it may also be just a function of vehicle preference, right? There's a lot of in Europe you don't see a culture of pickup trucks. As we see in the middle of America, you get that. So maybe it's going to take time for the auto manufacturers to make a cost competitive and socially acceptable pickup truck.
Yeah,
we'll see with the F-150 and others that are coming down the pipeline, but I think it's just a difference culturally between.
I think and the challenge is obviously, electrifying a pickup is substantially harder than you need those gains in battery technology to get those heavier vehicles to move.
And traveling distances, right? People living in European cities aren't driving hundreds of kilometers or commuting an hour a day as much. So that has a strain on the size of the battery, the cost of the battery, the cost of the car, things like that.
Well, just even infrastructure for charging and the cost to install that. And, it's a chicken and egg. When you talk to people about why they haven't bought an EV, it tends to be, I have to, range anxiety and I can't charge it anywhere, right? So Europe is smaller, it's more contained, it's got a higher population density versus, say, North America. And, just the infrastructure alone to get over and to get people in terms of getting them over the hump where they're not going to be stranded in the middle of nowhere with an electric vehicle.
Yep.
Yeah.
And then I think just government policy over the last 4 years has been very different in Europe than it has been in the US.
Yeah, well, I suppose there's some perspective of the Biden administration. There are a lot of sort of announcements within the campaign, but very little concrete confirmation of what those, earmark money, how will that translate? I think what we would say is that the quickest way to get EVs to EV penetration to increase would be to sustain or increase, direct subsidization of purchases. Yes, building out infrastructure will certainly help, and there's been an absence of that because of the weaker involvement of the government in, charging infrastructure and so on. But realistically, yeah, if it suddenly is $5,000 or $10,000 cheaper to buy a Tesla, you're gonna get a lot more people doing it.
Yep.
I think you've seen that. I mean, I think if you look at Quebec specifically, their direct incentive program and their rebate on electric vehicles, they have one of the highest electric vehicle adoption rates outside of California.
I guess thinking a bit further upstream, I was wondering, Andrew, if you've got any sort of perspective on sort of the green aspect, and in particular, are you starting to see, or is there any sort of perception around projects that can better prove their green credentials, preferentially getting financed?
I think it's interesting. I think there's a shift going on right now. I mean, you've obviously seen green aluminum and regular aluminum, and there's always been this talk of green nickel. I think it's right now, ESG is kind of a page that if you have that credential, you play it up. I don't know that there's a difference right now between how people are getting financed from public investors. I think where it's starting to get interesting is as OEMs start to think about who do they want to procure their supply from. And the group I was talking to today said, they're going through their cars and their batteries, and they of the CO2 footprint of their cars, the battery is going to be one of the biggest parts of that. So anything they can do to procure more carbon friendly inputs, it's just going to be something else that they can talk to about their products with their customers, but also to meet their own corporate climate obligations. And so I think there's going to be, at some point, there's not going to be enough green nickel. Not everyone's going to be able to have green nickel. But those who do, it's going to be a differentiator for them. I think right now, it's more a question of how do we finance as many projects as we can to meet that demand versus, a preference. I think it's more at present, the key driver is more the economics of the individual mines and the capital request up front.
Well, and I suppose, John, from that perspective, you've been developing a project and in charge of Dumont. I guess we see that one of the key challenges, obviously, around developing a sulfide project historically has been the lack of incentive of the people who have the smelters to take additional material when they've got self-sufficiency. Do you see some sort of technical solutions around that? And I guess also from a governmental perspective, as a junior project developer, what are the things that governments can do that would most easily allow you to, attract financing and promote your project?
I mean, Dumont's very fortunate in Quebec. We have a very supportive government. Absolutely, no question about it. A lot of projects struggle with clear permitting timelines that end them in this churn. So it's, it's unpredictable about when they'll be ready. So, even if they had the perfect project, there's some really good projects that are still sitting in the ground because they're not permitted. And that's the reality. So, I mean, that's one piece sort of in general for governments. I think the other, we've had support from Investissement Quebec and from the Quebec government and directly in several ways over sort of the life of the project. I think the smelting issue is, it's interesting. We don't have enough smelting capacity currently. When we talk about all these mines and we talk about the need for all this finished nickel, people talk a lot about, and even Elon talked a lot, miners, mine me some nickel. It's not just that, right? It's getting nickel into concentrate and then what do you do with it? And we don't hear a lot of talk about smelter expansions. We're not hearing a lot of talk about that. Smelters have actually contracted over the last 10 to 15 years. And I actually think in some ways, like if we look at what I think that at some point, there's going to have to be a switch in terms of who looks at doing that refining and what it looks like. And I don't think there's necessarily technical challenges. I mean, I think anything new is technically challenging and you need to figure out how to do it. But I think people know how to leach concentrate or how to transform concentrate. There's going to be some purification. Obviously, there's a lot of steps, and maybe it's a bit of a smelter and a bit of a hydro plant. But I think that there's paths forward that are known that could happen. But I also think that the whole idea of making a sulfate is not necessarily, like, that's where I think the miners, talk about who needs to do that. And I think, miners are good at building mines and making concentrate, at least from a base metal perspective. That's what they do very well. When you start moving downstream, what worries me is when we say, okay, well, I'll build a sulfate plant because I can leach the concentrate, I can purificate and make a sulfate. That's going to take, by the time I build a mine and start generating concentrate and make sulfate, that's 3 years from today, if I got money tomorrow. Perfect scenario. 3 years today, battery technology may not be using sulfate anymore. And when I look at how quickly, like, even if you look back at Battery Day and look at the slides that Elon was showing, one of their cathode slides had nickel sulfate goes to in a cathode, and it said sort of lots of stuff happens and then it pops out. And then he had a simplified one where it said nickel metal cathode. So, what I took from that is just that, they are looking at ways to simplify that lots of stuff happens, to make it more efficient, to make higher energy batteries, and to make that process cheaper, quicker, faster. And the worry that I have is that if the miners start taking on all of that upstream development and downstream development, they're not going to make the product that the end users want because the end users are changing so quickly. And that, that's where partnering, and when Andrew talked about the whole offtake conversation, that's where I think there could be some synergy there where, working either with a JV or having a direct offtake purchase with one of these downstream companies, whether it be cathode, precursor, battery, all the way to car, because that's where the chemical people play. That is their space. Yeah. And I'm sure, I think it fits better if we look at how to do that. And I think it's not us. The miners can't sort of throw up their hands and say we're not going to look at it, because we have to. If we want our projects to be developed, we have to have a home and a market for the concentrate. But I do think that moving forward, we will start to see more what would have been considered unique offtakes 5 years ago. I think Piedmont is exactly that starting point. Piedmont isn't selling them lithium hydroxide or lithium carbonate. The offtake for Piedmont is spodumene. And so, Tesla's going to buy spodumene and do whatever they're going to do with it. I believe they've announced that it's going to be in Austin. I think I've seen something about that online. So I sort of extrapolate that they've started there, but maybe that's coming to nickel. And maybe that's how we get some of these projects developed with non-traditional offtakes. Because, it's not just, people want to, historically people have invested in nickel to expose themselves to the nickel price cycle. This might be different, where people are investing in projects in nickel to physically access the metal, as opposed to just investment to be exposed to a price boom. Now, it may be chicken and egg, but I think, and there may be groups of people and it may be multi-party financing, but I think, that's something different today than maybe what we saw previously in the nickel space.
Yeah, it's kind of analogous to, at different points in the mining cycle and the evolution of different commodities, you've seen end users take what might be considered unnatural steps. So like the Japanese in the 70s and 80s investing in Australian iron ore mines and coking coal mines. Mm-hmm. And then, in the mid 2000s, all the steel producers looking to vertically integrate, only to unwind that over time. And it's kind of born out of necessity. And I think, Tesla's move with Piedmont is to create an environment that allows, Piedmont to go out and raise the capital that they need to do it. And it doesn't take a lot of money for these OEMs. There's different ways they can do it. They can invest in the project and put real money to work, or, they can do an offtake deal. Yeah. Where the rubber's going to hit the road is they're going to want some sort of fixed price or some sort of price control. Mm-hmm. The investors are going to want the retention of as much upside as they can. Yeah. So it's just going to be that perennial debate of how it gets done. But maybe there's certainly a benefit of a halo effect of having a big OEM associated with your project, and being able to market that. And when you go to project debt banks, being able to say, look, here is the person who's actually going to use the metal.
Yeah. And for sure, and that's exactly what we're seeing with these Indonesian HPAL projects, both sort of a preemptive, if you like, right? These are projects that almost certainly wouldn't have been financed by any Western financiers at the kind of nickel prices where construction started, which is, substantially lower than where I think the nickel price was, 11, 12,000 tons when half of these were getting off the ground, $12,000 a ton, sorry.
Yeah.
And most of the financing is coming from the downstream consumers of the metal to a significant extent in these projects. And I think you see the Chinese OEMs have much more comfort with taking a moderately active role, or at least an equity stake in projects going all the way back to the mine, especially in lithium, but also nickel and cobalt for sure, which the Western OEMs for the most part, and it's certainly growing, and you see that Tesla's involvement is growing, and Volkswagen as well to some extent. But yeah, we need to see that sort of comfort with mining essentially on behalf of the OEMs grow.
No, absolutely. I don't, I absolutely agree. I think it's, that's one thing that sort of, historically North America sulfide deposits and nickel deposits, it was sort of a junior would go out and explore, flip it to a major would put it through, or build it and it would go through a smelter. I just think, today that's, and the offtake today it's changed, it's different, and that people want the offtakes, and then the offtake, it's hard, it's catch 22. Selling an offtake as a project owner, selling the offtake, that's my carrot. Everybody wants the offtake, and selling it too early then limits upside potential for a strategic partner to come in, because they want exposure to nickel prices, and maybe they want to do something with the offtake themselves. So it's, but then how do you get people's interest? It's difficult to weigh what the best arrangement there is when you're trying to balance how to put together a financing package. And who you want to attract into that financing package.
And especially when there's a lot of sort of hoops that you need to get through that supply chain that's, right, Tesla may take spodumene, but they're going to need to get that processed into lithium carbonate or hydroxide and then move it down. But then, and I think in nickel, you've got even more steps really between the mine and the cathode plant or the cell factory.
Yep.
Yeah, and I think it's going to remain to be seen whether the OEMs can get their head around incentivizing each of those different steps in nickel, because it's so complicated. It's one thing to take a 20% stake in a mine and 20% of the offtake, but then what do they do with the offtake? They can't just put the concentrate in a battery.
No, exactly.
Right.
They got, there's something they have to do with it, and if they're not willing to invest in the mine and they just want offtake, then they've got to pay up for that, right? Like there's got to be something, because then we still have to go out and get investment for the mine. Yeah. And then you've now taken your carrot away for the people that you're trying to attract. And nickel's one of them, it is the most volatile of the base metals. It tends to spend, when it goes high, it zooms up the highest, it crashes down the lowest. It's one of the few metals that spends more time below sort of the 10-year average than it does above, just because of how high it shoots. So it's very volatile. So as somebody who's developing a project, timing that nickel price cycle and looking for projects that have that length of time, and LME exposure, it's hard. It's a hard balance. I think it'll be difficult. It'll be interesting to see how it all kind of works out in terms of, who's the first to blink and who moves first, and and what do we see, and how long people wait. My not worry, but I guess it's a bit of a worry from a nickel is people waiting too long, and by people I mean majors, strategic partners that want to come in. The price zooms up because there isn't any nickel, and then it's almost too late, because then the issue with nickel price when it goes up to the highs, 2007. Killed the nickel industry for how many years? 2007, it hit whatever, $50,000 a ton for a day. It was up at the $25,000 per ton, and it drove a whole bunch of substitution out of stainless steel, and that never came back. And so if nickel becomes so expensive, people can't afford to put into batteries. There's some very smart people working on those battery technologies, and I think it'll also drive faster development away from it. So I think there's windows of opportunity here. And, I think we need to start looking about how to take advantage of it now.
Absolutely. Well, I think we're pretty much out of time there. So I guess I'll wrap this up. But thanks to John and Andrew so much for joining. It's been really good to have this conversation. Very interesting, lots of good topics. And thanks to the SME. And I guess we'll wrap it up now. Thanks very much for those who've watched through.
Thank you very much.
Thanks, everyone. Thanks, Alex.